guys to today's video. Thank you for subscribing. Thank you for tuning in. If you're new to the channel, please smash the subscribe button and let's learn. Today's video I'll be talking about something very important in the forex space. How to understand what is leverage and lot size and how these both tools play important roles in our journey. As a forex trader, it is very important to have abreast the prerequisite knowledge, and leverage and lot size are part of those tools. Now, what is leverage and lot size? Stay tuned. Please smash the subscribe button. A lot size is a unit of measurement for the volume of a currency pair, and it is standardized into three categories. There are micro, mini, and standard lots. In forex market, we trade currency pairs, and the unit for measurement, the unit for entry volumes of these said currency pairs are called lot size, and they are standardized or breaking down into three categories. We have the micro lot, mini lot, and standard lots. The micro lot, this equals 2 decimal points, i.e. 0.01. It means after the decimal point there are 2 digits. It can be 0.02, 0.03, 0.04, but there are 2 digits after the decimal point, and this is the least a broker can offer a trader. Mini lots, this equals 1 decimal point, that is 0.1, 0.2, and so on and so forth up to 0.9. Because in basic mathematics, we know if it is up to 9, it can be approximated to 1. Then for standard lots, this is a standard unit of a currency pair, and it is represented with one standard number. This is a standard unit of a currency pair, and it is represented with one standard number, i.e. 1, 5, 10, 20, 30, and so on and so forth. But there is no decimal point. It just goes from 1 down to infinity, so as much as the broker can offer and as much as you have in your trading accounts. To calculate the price movement of each lot size and how much is made for each movement can be done using a calculator. But to do that manually, we calculate it this way. Note that there are calculators, there are softwares, and there are websites out there that can help us calculate lot size. There are a lot of them on the internet. If you make your research, you get your handful of them. But as traders, these things were first done manually, and it is important to have the manual knowledge to calculate lot size. A micro lot, e.g. 0.01, equals 10 cents per pip. Remember in our last video I talked about pip movement and how to understand pip movement. Now, a micro lot, when used in a trade, every movement of a pip represents 10 cents. E.g. EUR/USD trading at 1.13725. If the price changes by 1 pip from 1.137 to 1.173, meaning 2 has changed. Remember I told you in our previous video, when calculating for pip, the last number is taken as 0. You start from the 4th decimal. Now notice this 2 has changed to 3, meaning an increment by 1 pip. When using your micro lot, this increment in price movement means a 10 cent increase. I hope you understand. You can watch the video again for clarity. A mini lot is 10 times bigger This means every pip movement equals a dollar, equals $1. That means a change in price by pip is equal $1 increase or decrease. If USD changes price from 1.13725 to 1.13735, meaning an increment by 1 pip, using a mini lot of 0.1, that equals a dollar increase. Note that if you increase your lot to 0.2, it means $2 increase. If you increase your lot to 0.3, it means $3 increase. Now, a standard lot is 10 times bigger. This means every pip movement equals $10, i.e. a change in price by 1 pip equal $10 increase or decrease in price. Now, this is a graphical illustration of what I've been saying. We have micro lots, mini lots, and standard lots. Micro lot equals 0.01, means 10 cents per every pip. For the mini lot, 0.1 equal a dollar per every pip. And for standard lot, 1 equal $10 per every pip. You can see the arrow, micro, mini, standard, the increase in currency value and what it means per 1 pip. There's a graphic illustration of what I mean. You can take a screenshot of this and memorize it just to understand properly what you are doing. Now, what is leverage? In simple words, leverage is the use of borrowed money to trade. In simple words, leverage is the use of borrowed money to trade. It is a process whereby a broker gives access to more money than we own. Remember, in trading, we access the market using brokers that have been regularized, using brokers that are being approved by government agencies. So the process whereby this broker lend us borrowed money, giving us access to more money than we own, is called leverage. To buy the standard lot size of any currency pair, we need the physical equivalent in cash. To buy USD at 1.13725 using a standard lot, we will need $113,725 in cash. And I'm pretty sure not everybody has access to that amount of money. Now, to trade in that volume, regarding the lot size that you use in entry trade in a smaller account, the process of doing so is regarded as leverage. Leverage gives more buying power to us, and these are offered in ratios by brokers, e.g. 1:100, 1:200, 1:50, 1:25. Some brokers go as far as offering 1:unlimited. If you are using a 1:100 leverage on your account, this simply means you have when you have $1,000, it means you have 100 times more buying power, 100 times more trading power when your account is set to 1:100. That means if you multiply 100 by 1,000, it gives you 100,000, meaning you can manage trades up to $100,000 in that account. So even when you have just $1,000, these brokers can give you access to $100,000 so you can use lot size and catch more wins in the market. Disclaimer: the higher the leverage, the more susceptible you are to make more money and also lose more money, because this opens you up for sporadic movements in the market. And the more the lot size increases, the more the dollar equivalent increases. This means, remember I told you standard lot, one standard lot gives you $10 movement in price. So if you have two standard lot, means $20. If you have three standard lots, it means $30, and so on and so forth. You just keep multiplying. Now, for a recap, what is leverage and lot size? We understand that a lot size is the unit of measurement for the volume of a currency pair, and it is standardized, broken down into three categories. They are micro, mini, and standard lots. Micro lot, this equals 2 decimal points, i.e. 0.01. Mini lot, this equals 1 decimal point, 0.1. Standard lot, this is a standard of unit of currency pair that is represented with one standard number. And I gave how to calculate it and a visual representation. This is graphical. When you have this stored in your mind, you understand how to go about the first market in regards to lot size. Then I explain what leverage means. It simply means keep it simple. Keep it really, really simple. This means access to more cash that we own that are being offered by brokers. Mind you, these brokers are regulated. Leverage gives us more buying power. I hope you've learned. You can always come back to the video and watch. Please subscribe, smash the notification button, and let's keep learning. I promise to drop more and more of such important classes to help you grow in your forex space. Soon we'll enter into analysis, but for now, keep learning. I want to take this journey slow and simple for the average beginner out there to understand fully what it means to be a forex trader. Thank you for watching. See you on the next one, guys. God bless.